Thank you, Mr. Chairman. Thank you, Mr. Chairman, for being here.
Okay, great. Yes, ma'am.
My friend, our ranking member, said that you are knuckling under to the big bank lobbyists. Is that true?
No,
It seems to me that the big picture should not go unnoticed. Do you recall a year or two ago when inflation was raging? I think its peak was about 9%. Many economists and other experts, based in part on history, said that you were going to have to provoke high unemployment and put our country into recession in order to get inflation down. Do you recall that?
very, very well.
Are we in a recession?
We are not.
Would you, as an American, trade places right now with Germany in terms of the economy?
No, I sure wouldn't.
How about China?
No, wouldn't trade places.
How about France?
No, thanks.
Things aren't perfect. Inflation's obviously still sticky, and long rates are too high, which I want to talk about in a second. But the fact is, knock on wood, we have.
Welcome back to Conservative Chronicle. Today we dive into a fiery exchange between Senator John Kennedy and Federal Reserve Chair Jerome Powell. This hearing had it all, from debanking controversies to inflation and interest rates. Let's get into it. So, Senator Kennedy didn't hold back. He questioned Powell directly about the practice of debanking, where banks shut down accounts based on political views.
Can, to a large extent, control short rates, can't you?
Yes.
Through the Open Market Committee. You can't control long rates, though, can you?
No, we can't.
Why is that?
So a lot of things go into long rates, and one of them is the expected future short rate of Fed policy, but many, many other things go in. Expectations of inflation in the longer run, the sort of risks around the economy and around the budget deficit go into something called the term premium, which is the part we can't explain when we do these decompositions. And so, you know, it's set by supply and demand in the bond market at the long end, and we're not particularly. We have some influence, but mostly not.
Kennedy demanded answers, pointing out that debanking can unfairly target certain businesses and individuals. Powell responded, acknowledging that debanking is a serious issue. He agreed to re-examine these practices, signaling a willingness to address the concerns raised by both sides of the political spectrum.
Many Americans are looking at short rates and looking at the Fed's behavior and how you reduce inflation, but they don't see the long rates going down, and obviously that affects mortgage rates. And I would encourage you and your colleagues to spend some time explaining to the American people why that is. Final question. If you went home tonight and Mayor Powell, your spouse, said, you know, I got a call today from our bank, and they're debanking us. They're worried about their reputational risk because they don't like our politics. Would you think that fair?
No, I sure wouldn't. And as I mentioned earlier, I too am troubled by the quantity of these reports, and really want to understand better why this is happening. You know, one theory is that banks are just very risk averse around BSA and money laundering, and that's because we're so tough on them and that they just don't, any red flag is enough. But it may be that this whole thing with reputation risk needs to be thought about. It's actually coming out of our one manual that we use. We're taking that concept out, the manual that we've been using for account access, for master accounts. We're just going to take that out. But I think this needs a fresh look, and I think it's time for that, and we're going to do that.
Well, I've asked our
This is a rare moment of agreement between folks like President Trump and Senator Elizabeth Warren, who've both spoken out against debanking. But Kennedy wasn't done. He grilled Powell on inflation and interest rates, questioning if the Fed's policies were influenced by political pressure. Powell stood firm, emphasizing the Fed's independence. He stated that the Fed is not in a hurry to cut interest rates, citing a strong economy with low unemployment and moderate inflation. Powell stressed that the Fed's decisions are data-driven and based on economic conditions, not political whims.
chairman, and he has agreed to invite some of the CEOs of some of the banks that have been debanking people. The CEOs,
Yes.
not their lawyers, not their PR consultants,
Not the lobbyists.
not their priests, them, the CEOs to come in and let's talk about this and find out what the hell's been going on.
Thank you, Senator Kennedy.
He reassured the committee that the Fed remains committed to its mandate of maintaining price stability and full employment. This intense exchange highlights the ongoing debate over the role of the Federal Reserve and the impact of political influence on economic policies. What do you think about Kennedy's
Experienced a soft landing, haven't we?
Not for me to say, really. I'll let others
Well, have
make
we
that.
experienced a hard landing?
No, we sure
Are
haven't.
we in a recession?
No, we're not.
I call that a soft landing. And it seems to me that you and some of the ladies and gentlemen who are your colleagues at the Federal Reserve behind you deserve some credit for that.
Thank you.
I don't know why you don't take the credit. Everybody else in Washington, D.C. does. Again, I'm not saying things are perfect, but I never imagined that our landing could be this soft, albeit not perfect. And I wanted to thank you and your colleagues for that effort. You sure didn't get any help from Congress and our president on the fiscal side. I don't expect you to comment on that. You and the Federal Reserve can.
tough questions and Powell's responses? Are banks shutting down accounts based on political views fair? Drop your thoughts in the comments below. And if you enjoyed this breakdown, don't forget to like, subscribe, and hit that notification bell for more breaking news and analysis. Thanks for watching, and I'll see you in the next video.